Thank you. Thank you all who have joined for this amazing webinar, which we are happening today. Good morning, good afternoon, and good evening to everyone who have registered for this from different countries and want to witness great session happening. First of all, Happy New Year 2023 from AI CoreSpot team to everyone. Hope you and your family are doing safe. Just to let you know, today is the first webinar about the banking sector in US region in the new year from AI CoreSpot. And what a great topic to start the same. It's about how technology is changing the banking sector, and we are really excited to host this. Now, to begin with, let me introduce myself and the company to you. My name is Nitin Naveen, and I'll be your host for the day. I'm working as Vice President Innovation Strategy at AI CoreSpot. I have great experience around a couple of decades in consulting firms dealing in and around the emerging technologies. Further, I have been joined by my couple of great colleagues, Arvind and Naveen, who will also assist me in keeping the event lively and resolving technical glitches if it comes in between. So thanks a lot for them to putting in hard work and making this one a great success. We'll try to provide a seamless experience to all of you so that you can gain maximum output out of this. Let me provide a brief background to all of you about AI CoreSpot. We started a couple of years back, backed up by InfoVision, who is our knowledge and innovation partner, and Digit7, who is our technology partner. Our mission from initial days is to serve as a hub for information regarding Industry 4.0 technologies. The focus is to provide all of you a deep dive in all the sectors wherever technology is there. And every month, the theme is different. We are gaining momentum month on month. Our aim is to be #1 AI-driven community all over the world so that like-minded people like you can be part of the same in supporting, growing, and making it a success. The focus is to do industry-backed webinars and hybrid events. The knowledge base will be made from reliable data through our partners, InfoVision, Digit7, subject matter experts like our speakers, thought leaders, industry leaders. We'll enrich the content through digital content, blogs, podcasts, videos, and newsletters to shed light on the ever-evolving industry. Today, we are having a lovely and unique webinar around the great theme, which lays emphasis on banking industry. So if you want to know various technology applications in banking, reason to adopt technology for banking operations and services, role of intelligent automation in the banking sector, rise of neobanks, ChatGPT, and so on, then you are in the right place. We'll go all over it throughout the panel discussion and give lots of insights to you. There are lots more in store for next month with focus on different technologies like AI, ML, blockchain, IoT, AR, VR, digital twins, metaverse, quantum computing, and so on. So request all of you go through our website, which is aicorespot.io for future updates. Also, please like our social media handles, which will keep you all updated on everything what we propose to offer in the coming months to follow. So before starting with this day, I'd like to highlight a few things so that it can set up the tone for the great day. A special mention about our knowledge and innovation partner, which is InfoVision, and who has supported us since beginning and provided us the right support to bring the community together. Some about InfoVision. They are end-to-end IT and business services provider, specializing in providing technology transformation and innovation projects for over 25 years across multiple industries. And they serve 12 global locations, including US, Latin America, Middle East, and India. They also have a unique state-of-the-art research and innovation lab named Digit7 in Richardson, Texas, with 5 great innovative products. So to get in touch with them, kindly log on to the website, which is infovision.com, and leave your details through the contact us section. Now coming on and moving to our community partners for today, it includes Jordan Commercial Bank, CTBC Bank, and East West Bank, who came together to make this webinar a success. Special mention to attendees of the event who registered and came together to achieve their objectives through this forum. At the end of the day, if you gain a few things out of this or get to network with each other, our core objective as a platform will be achieved. Further, if anybody wants to ask questions, they can type it in the Q&A section, which you can see at the bottom. You can type in as and when the panel member speaks, and we'll try to get it answered as per the time permitted. Now, let me hand over the stage to Natarajan, who is the Chief Business Officer handling banking, financial, and insurance domain at InfoVision, and who is the moderator for this panel discussion as well. He's joined by 4 great leaders. Ralim, who's the Chief Retail Banking Officer at Jordan Commercial Bank. Marianne is Chief Compliance Officer at CTBC Bank. Soumya is the product management and strategy professional, and Parumita, who is the senior vice president product management at East West Bank. So over to you, Natarajan, to begin this exciting panel discussion.
Thank you, Nitin. And good morning, good evening, good afternoon to everyone from whichever time zone you guys may be joining in. I'm looking forward to this, very lively and active discussion. This is the first webinar that we are doing from a course part for the, banking and financial services industry. So, happy to be here and happy to moderate this panel. I know we have, great leaders, technology, product, and also, compliance. So that's the 360-degree view that, we can get from the wealth of knowledge from the leaders, we have on this panel. I'm sure all of us agree that technology is the only dynamic thing. It has always been changing day in and day out. Right? You see new versions of existing, tools, software, or framework, or completely different. Like Nathan, you mentioned ChatGPT. It has taken the world by storm in the past, couple of weeks, and now everybody is worried if AI is going to take over everything. And then somebody said it's not AI which is going to take over the world, it is somebody using AI who's going to take over the world. So a lot of interesting things are happening around technology these days, and pretty much I would say just about anything can be done just with a laptop or a smartphone these days, and virtually. Gone are those days after COVID, the need for physical presence, either to work from office or to do banking in a brick and mortar facility, or to do transactions, online shopping, even in the healthcare industry. There are virtual visits. You don't have to see the doctor for usual conditions. So there are so many things that technology is transforming our lives around us. Now, specifically in the banking and financial services industry, I've been, throughout my career in this industry for about 28 years now. It's been a laggard compared to other industries, probably for the right reason, because there's so much regulation and compliance, because we are dealing with, people hard-earned money. We want to make sure that everything is compliant, the data and the information and the assets are safe. So typically, I've seen BFS industry lagging a little bit behind adopting any new technology. They just want to make sure that all the kinks are ironed out before they embark on that bandwagon. And more so, at least from my experience, I've seen the US region, pretty much I think the North America region, also lagging behind APAC or EMEA in terms of adopting newer digital trends. Again, partly because of the regulatory and compliance reasons. So it's going to be interesting, probably 60 minutes. We have questions for the panel across different areas on technology and compliance. Maybe first off, I'll start with, Marianne. You have seen during COVID, almost 10 years worth of transformation actually happened in just 1 year, because it was the need of the hour, and necessity was the mother of invention at that point in time, because people couldn't do anything. Everything has to be done virtually. They have to be remote. So a lot of changes and transformation actually happened in that 1 year. Now, how do you think banks or financial institutions still continuing that technology transformation? How are they optimizing their cost, or improving on technology? Can you provide some color on that?
Yes, of course. Hello, everyone. My name is Marianne Yen. Just a little bit about myself. I come from a legal and compliance background. I am not a technology person. So my contribution to this panel is from a user or consumer of technology. As a compliance officer, I need technology to help me get my job done and to fulfill all the requirements that are imposed upon banks and other financial institutions. So that's my where I'm coming from on this panel. And also, I'm not speaking on behalf of my current employer, CTBC. It's the largest bank in Taiwan. But I am speaking as someone who's been in the financial services industry for almost 30 years, I'm afraid to say. So I'm speaking about my experience having worked at large banks and foreign banks. I started at Morgan Stanley, then Barclays, and now have very much experience in the foreign bank branch situation. And also, I'm speaking to you as someone who operates in the United States and in particular, New York State. There's a song, New York, New York, that has a line, if you can make it there, you can make it anywhere. That's very true for banking compliance because the New York State regulators, in conjunction with the US federal regulators, have set the bar very high for banking compliance. And so if you can pass muster with those two regulatory bodies, you're doing most things correctly. So that was just a background introduction so you know the context of my answer. So in the US and in New York State in particular, you have to keep up with technology, not just because it's good business. If you don't have state-of-the-art technology, you cannot process payments quickly. You can't settle trades accurately and quickly. So technology has always been a staple. As our moderator said, COVID has really accelerated the need for that because you have to provide 100% remote access to all of your employees, including back office operations that traditionally did not work offsite. So now we know that's possible. But in the US and in New York State, it's also compliance driven, not just business driven, because of the additional use of cloud services, using third-party vendors to support your IT controls. The regulators recognize that so much of it is now out of the bank's control and jobbed out to consultants and third parties and fintech firms. And so that has really ratcheted up the due diligence that you have to run on all of those counterparties who are supporting your IT efforts. So that's one big change. And also in New York State, we are required as a supervised entity to certify every year that our IT is compliant with AML requirements, with sanctions requirements. And that is a very big deal because someone like myself, the CCO, or the board of directors, or someone in a very senior position needs to sign on a dotted line that I personally take responsibility for the fact that my IT is working and is compliant with all the regulations. So that personal accountability and responsibility has really made it much more rigorous for an organization to make sure that every part of it that supports the IT function is working properly. And of course, we rely on sub-certifications from our technology people, from our systems people, from our operations people. It's a collective effort to assure that our systems are working. And without all of that, I would not have the confidence to be able to sign my name to a certification. I don't know if that answers your question fully, but that's the view from a chief compliance officer's chair sitting in New York City.
No, absolutely. I think, you nailed it on the head, covering all the aspects, right? So to me, my view is technology is always a tool in the toolbox for the business team. End of the day, technology aids the business outcome, whether you do with technology A or technology B. And, we've even seen over the course of years, people add legacy technology like mainframes, and then, it changed to client server. Now, it is all microservices, API driven or app driven or, mobile driven. So your answer is, exactly what we were looking for. It's not just technology coming and saying, hey, this is cool, let's develop this. You have to do it in a way that, the business actually needs that solution and it is compliant. So it passes muster, with the regulators, especially, like you said, in a state like, New York or even Massachusetts. Anything and everything that goes wrong, you don't want it in the front page of Wall Street. Look at what happened with Zelle a couple of days ago, right? So, so that's a good segue. We all understand, or all companies understand that technology is good, and emerging technologies especially has a lot of promises. And with the millennial and Gen Z customers, they are looking for almost, instant gratification. So they want everything in the, palm of their hand to be done with a, mobile phone or tablet, or even without the device, using say Alexa or Siri. They ask something and then it gets done. Now, this question is for, Salim. From your experience, what do you think should be the due diligence that is needed for a successful, technology adoption? Or if you want to bring a change, what due diligence is required from, your perspective?
Thank you, Raj. First of all, I'm happy to be here. Let me tell you a little bit about myself. My name is Salim, obviously, and I'm the Chief Retail Officer for Jordan Commercial Bank. Been with the bank for about 7 years now. Time flies. Prior to Jordan Commercial Bank, I was with the Visa International as the country manager for Jordan, Iraq, and Palestine. And prior to that, I was with Bank Al Ittihad for about 5 years and a half. And then I was with Washington Mutual and Wachovia Bank in the United States before. During kind of the financial meltdown, unfortunately, they were bought out by Wells Fargo and by Chase. That's actually a very good question, Raj. When we talk about technology, it seems that there's some kind of I would say a FOMO type of effect, the fear of missing out. You see a lot of the banks and a lot of the financial institutions adopt technology because it's the latest and the greatest. But in all honesty, we need to kind of take a step back and view technology as the technological solution should be a value technological solution. And what I mean by that is that you want to make sure that it provides value. And value can come in so many different ways, right? So value can come in. So for example, would be increasing revenue and lowering the cost. Value can come in for mitigating risk and increasing security. Value can come in enhancing customer experience. And usually at the bank, when we assess any kind of a technology, we say, okay, does it really meet any of those three pillars, so to speak? So if you hit 3 out of 3, that would be great. Let's go, right? If you hit 2 out of 3, then that's probably also a good technology. But if you only hit 1, then you might want to take a step back and just reevaluate the technological solution. Now, having said that, of course, technology has to fit in the overall digital strategy and roadmap. I mean, it cannot just be an ad hoc type of technological solution. At the end of the day, it has to serve a need. And I believe that technology is an enabler to serve our customers. Of course, there are many things to also kind of consider when you adopt any technology. What about the cost? I mean, is the cost of adoption pretty high? Are the people, the talent, and the resources, are they ready for that technology? Is the technology scalable? Because, I mean, if technology might be, and we know that technology is ever changing, right? So it might be serving a purpose today, but would it be serving me tomorrow, right? So it has to be highly scalable as well, too. And of course, I mean, it has to pretty much comply with the regulator as well, too.
No, absolutely. Soumya, from your experience, being product manager and strategy leader, anything that you want to add on to what Salim mentioned?
Sure. Let me introduce myself first. So I started off as a technology professional a long time ago, and in due course, kind of changed the careers, so to say, to product and strategy in the financial services area. Right. So with that in mind, I think what Salim answered was absolutely spot on. But just to add a bit more to it, right? So first of all, like, technology is not kind of a end all or be all by itself, right? So you have to have a strategy and a vision for your company, for your financial services institution. Which are the market segments you want to play in? Which customer needs do you see yourself addressing? What is your niche, right? And to meet those kind of requirements, where do you want to be, right? And when do you want to be there? And to be there, to get to those kind of strategic needs, what is it that you need to do, right? So it's so technology doesn't come first. Right? Your needs and your strategy comes first, and then you figure out how to do things, right? And technology is one of the enablers of that. And so I think very rightly kind of said by Salim. And there are kind of, you're obviously, I don't see this being any different than many of the other decisions that we made in kind of a strategic decisions that we made. You do your kind of research on kind of what is the impact on customer experience, on P&L, cost, profit, and their compliance and all of these other things, and then go for it. But the one thing I want people to keep in mind is sometimes technology is often expensive, not in terms of like just cost, but in terms of like resources. For many of financial institutions right now, getting to a certain place is a vision of what they want to be, which means that how much do they want to invest in technology. It also means how do they want to staff. Many banks, for example, are kind of flipping it on their head and becoming digital banks completely, right? They're almost starting to view themselves as the Apple in the financial services sector. Right? And so, it's like, so what it means is that what is the view of yourself as the organization? How will you staff for it? What is it that you will kind of promote? Right? So, for example, if you want to be Apple or a Amazon in the financial services sector, right? What does that mean? You have to invest in a certain kind of talent. You have to make sure be certain kind of responsiveness. You have to make sure you have a certain kind of infrastructure spending that you do to be able to respond and operate in that way. So it needs a lot of kind of coordination and soul searching within the organization if they are really willing to take that step. And once you have done that, then the decisions on what is good and what is needed and how you prioritize becomes simpler. But first of all, our organization needs to make sure that they realize where they want to be a few years down the line. What are the customers they want to support? Where do they see themselves as?
No, absolutely. And actually, that's a good segue into my next question, because you touched on the P&L or profit. So my next question is for Paramita. And we have seen this even in the recent couple of weeks. You guys knew the news. Goldman was rethinking their strategy on consumer banking. They thought they will provide the services because they'll have digital footprint. Everything is going to be modern. They don't have the legacy infrastructure like a bank. So they started with the Marcus division, and now they are trying to reevaluate that strategy. So my question is, how do banks or in general financial institutions balance the need for emerging technology and also sustain it operationally? Because I think like both Salim and Soumya mentioned, sometimes it's you do the due diligence and then you make it compliant, and there is a need for that. But end of the day, technology is not cheap. I think Soumya mentioned that. How do you sustain it operationally? How do you measure the return on investment? So can you provide some color on that, Paramita?
Sure. So a little bit about myself. I'm Paramita Bhattacharjee. I am the Senior Vice President at East West Bank. I have also worked prior to East West Bank at Early Warning Services, popularly known as the network operator for Zelle. And I have also been in the fintech industry at PayPal. So I bring in a view of the users, both from the banking and the fintech industry. And my answers here comes from my experience and not the institution that I work in. Now, going back to your question, we know that introduction and adoption of new technologies at any point in time, like my colleagues have said, it is always a multi-pronged approach. And I will approach it from a two-pronged approach, one of them being the customer and the user experience, which we all need to keep in mind at any point in time. And the second one being operational efficiency, or how do we sustain it operationally? The customers have a growing desire to access financial services from digital channels now, and this has led to a surge in new banking technologies that are reconceptualizing the banking industry. This has put digital on an overdrive, which has been accelerated by the pandemic. Mobile banking has become the go-to method for users to make any deposits, transfers, and monitor their spendings and earnings, which is now becoming a key differentiator for banking leaders. Now, to seamlessly enable this customer experience, it's important to choose the right technology and balance it on how we sustain it operationally from the institution perspective. According to a research, I'll just go back to a data point. According to a research published by Payments, Cards, and Mobile Group, 1 out of 3 consumers are only willing to wait for up to 30 seconds before abandoning an online transaction while accessing their bank accounts. So now it becomes imperative for financial institutions to be thinking about the technology stack, but at the same time, reduce latency and meet customer experiences and customer expectations, ultimately increasing the conversion of users. Now, while customer experience is utmost, it's just but one variable of the equation. And anytime we introduce technology, the financial institutions cannot ignore the operational impact, not even talking about, the compliance and regulatory stuff. So I think from all of the financial institution perspective, compliance is a must. So all technology that's being introduced must meet those compliance and regulatory standards. But touching upon the operational impact, it's important to identify the areas to focus attention on, right? As banking becomes digital, one of the potential concerns could be risk and security. In order to combat this, there are operational experiences that should be kept in mind, such as users placing holds on their debit cards, credit cards, banks holding funds for funds availability if a transaction is deemed risky, and financial institutions could potentially reduce cost inefficiencies by introducing all of the latest machine learning models that we were talking about earlier to detect like risky transactions. Though at the onset, there might be an investment required in technology, right? Things to think about are employee training and engaging the right kind of skill sets for operations handling. It becomes an important tool as well. And there are business and engagement models that needs to be looked at so that technology introduction is sustainable. And I'll touch upon a few examples. Do employees have to sign into multiple platforms now? It increases operational overhead, right, with the introduction of technology. So something to keep in mind. Another one that some of the banks have gone through is cloud migration. So at the onset, cloud migration is a huge investment. This investment cannot be undermined, but in the longer term, moving to the cloud is probably the sustainable way of increasing growth in business, data growth, and how the FIs cater to the customer experience. On the contrary, if the servers are located on-prem, the probability of risk goes up higher. Another super important aspect is business continuity planning and disaster recovery planning. So in today's world, in the changing world that we are going through now, FIs cannot be just focusing on one aspect and ignore the other. In order to have a competitive edge in the industry, both technology and operational scalability is the key.
Thanks, Paramita. One follow-up question to that. I agree with whatever you mentioned. How do we sustain the technology and the needs of the consumer operationally, but the needs of the user or even employees who are serving the consumers, it has been continuously evolving, right? So if you see in the past, if I have to deposit a check, I have to go to a bank, I have to give it to the teller. Then we evolved into you don't have to go to a bank. You can take a picture or a photo from your mobile app and automatically deposits that. Then we said, why do we even have to write a check when I can pay somebody using because from your experience, PayPal or Zelle or Venmo or Cash App, we have n number of apps. We have evolved into saying, I know your email address or a phone number, I can easily transfer money. I don't need that. Then even when you go out, you want to pay, there's a barcode or a QR code, you just scan. You don't have to pull out your credit card, debit card, anything like that. And then even so that's on the traditional banking. On the lending side, I think we all agree and understand taking a mortgage loan is like anywhere from 60 to 90 days, depending on multiple factors, your credit score, the location, the bank that you're using. And we have evolved to at least from 60 to 90 days to at least almost 30 days. Or, some financial institutions are trying to close a loan in less than 30 days. They still have to go through, a lot of steps in terms of pulling your credit report, assets information, your DTI, all of that. So the point is, the user or consumer needs have been evolving continuously. You give them something, they want better version. And especially with the millennials and Gen Zs, they're used to all of these things. Like you said, nobody wants to wait on the phone or even doing online transaction for more than even a minute. Otherwise they cancel and they move on. So how do you, as a financial services company, how do you measure that evolution in the user needs, consumer needs, and try to adopt your technology to match up with that? Otherwise, if you're being seen as a legacy company, then you're going to be sidelined. Like, look at what happened to the traditional brick and mortar companies who used to be the stalwarts in their respective industry. You saw Nokia or BlackBerry. They got sidelined when iPhone came in. Same thing, your Walmart, your Target on the retail, Amazon took them over. And coming to our own backyard, the banks, right? You have all of the top 10 mega global banks. Now they're afraid of all of your your Chime and your online only banks who are trying to serve the customer better. So how do you align or continuously match the customer expectation and needs to the technology needs?
So a great question. So for any business, as you already mentioned, it's imperative to keep the user in mind while undertaking any business initiative, right? Be it introduction of a new product or a feature, or integrating a new technology into the existing stack. A new technology is just a means to achieving an end, and which is solving the customer pain points. And the end customer could care less on what technology is being used. I, as a user, do not care about what technology the bank is using. So it's incumbent upon the financial institution to balance out the technology needs and the user needs. And to build this alignment, there needs to be an internal alignment and the necessary infrastructure, keeping the organization focused on the brand's promise to the customer and prioritize interoperability. As companies get bigger, they multiply their brands and expand their customer base. The organizational structure also diversifies and specializes. Now, each department begins to focus on its specific product or service offering or segment of the customer journey, and they could become siloed. From an organizational perspective, the first step to overcoming this fragmented experience is to rally all the internal stakeholders around a shared brand promise. Once this positioning is assured, then there is a technology imperative to ensure that the user experience across each of these platforms unifies gracefully with the prime directive. And it means designing the core product offering, which has to tie in well to each system that the user interacts with, be it the customer support platform, be it the marketing site, be it mobile apps, be it the CRM or any other specialty tools. And in all of these, an important aspect is to influence the entire customer journey. Gracefully integrating systems across a product line is a solid win, and users will appreciate it, but they will also expect to achieve similar parity of experience across all the offerings and all channels, right? So it's important to keep that omni-channel strategy in mind, keeping all the offerings in view. This is actually very challenging for any company, but it really levels up when organizations have localized teams focusing on creating experiences, and it puts the customer first, and a global team trying to get everyone marching in lockstep. And then driving internal adoption by meeting this customer demand is important. The other part that I wanted to touch on is the interoperability, how it's very important for us to prioritize internal operability, interoperability internally. So unifying this power of local knowledge, expertise of a global team, and consistency of methodology and voice across the organization creates a powerful platform. So when tech is then aligned and enables teams to meet the customer, that's when magic happens. The user gets a consistent narrative across all of their touch points and meaningful targeted communication. The anchor that ties it all together is the fundamental value offering, the brand proposition from which the user connects to the company and returns to the experience again. And once you know the key anchor, you know how to meaningfully connect all your independent systems.
Wow, very well said. So, I mean, that the complete ecosystem has to, operate in unison, right? Otherwise, you would have designed something that people may want or may not want, or their expectation is completely different from, what the system provides. And, we've also seen sometimes, it is a overkill or overburden for even, smaller things. You don't want to, excuse me, you don't want to kill an ant with an hammer as well, right? So you need to strike that balance of what your audience or customer needs and provide the relevant technology, and also ensure it's not just the technology, it's the overall customer experience using that technology. So very well said. So Salim, Soumya, Marian, anything that you want to add to that customer experience that Paramita outlined?
No, I don't have anything to add other than to say that compliance sometimes has to help out too. We've had situations where an account must be open and funded immediately to support a business transaction. And there you have to even be adaptable and supple in trying to expedite that without sacrificing your KYC processing.
Okay. Yeah, I mean, sometimes, you have to have mandatory hold periods, even say for fund transfer. You can't do it instantly. You have to keep it for a certain time so you can do your checks and balances in the back end. Yeah, understood. Yeah. So yeah, you have to compromise some of the customer experiences for compliance sake as well. So the end user, may or may not like, but end of the day, it is for their own good, so that if everything is instant and if there is a fraudulent transaction, then you have to live with the impact of that as well.
I agree with Paramita. I mean, at the end of the day, the customers don't really care about the technology, or what they want is they want things that are being done better and faster. Just one caveat here is that look at what happened. I mean, they were kind of pretty much listening to their customers all the time, and Nokia, failed to, predict the next revolution in the smartphones, right? Because they kept listening to the customers. The customers were extremely happy. They said, yeah, things are okay, things are done. If we want to make a phone call, it's easy and so forth. But then Apple came in and they introduced something completely new. So you want to be careful about listening to the customers, but you do know that the customers actually want things, instant gratification, and they want always things that are being done, a better, customer experience.
Yeah, so actually, that's a good segue into another topic that I wanted to cover. Like you said, yes, you can do incremental changes. Taking the example of Nokia, maybe you built incremental changes, UI, and maybe faster processors, etc. But then somebody comes and sweeps you under the rug, completely changing the face of the phone. There's no buttons. Everything is UI, right? So that's a wow factor. So my question is, at least from banking industry, it's heavily document intensive. A lot of processing. You have to apply for a loan, you have to submit an application form, you have to submit your W-2, you have to submit your bank statement, so on and so forth. So companies were just trying to do digitization to help improve the process. Can we build OCR, ICR solutions to extract data rather than somebody sitting and typing all of the things from a paper document? So that was a digitization movement at one point in time. Then they went to digitalization, where they said, can we remove this process completely, and can we connect directly to pay vendor or a bank through APIs or any other connectors to get that information, rather than you providing in a paper document, then me converting it electronically. Then we evolved to design thinking, right? Or completely reimagine the process. Do we even have to do the 40 steps to be able to approve a loan? Especially if the customer is already with you. Like say if you're a big bank, you may be having your retail bank account, and maybe you want to get an auto loan or a student loan or buy a house. Why do you need to ask for all of the information again when the person has been your customer for I don't know 10 years? So my question to Soumya is, how do you think between digitalization, design thinking, how can customers actually take advantage of all of that if a financial services institution bring all of these things together in a holistic solution, so you don't treat customer in silo across your different product lines?
Right. So, so I think this goes back again. I kind of something kind of I heard earlier is to kind of think about your position in the market. For example, if you're a smaller financial institution, it's hard for a smaller financial institution to be a market leader, sometimes in digital technology, because it requires a lot of innovation, requires some amount of investment. And so what you will see is that there are at least two different kind of ways different companies are approaching this. One is kind of, you look at the larger kind of banks and financial institutions. They have the funds to do a little bit of both, digitization and digital innovation. So they are digitizing their old processes, which is great, which is making them more efficient. But sometimes it also tends to hide issues under the rug, right? So if you have digitized and you're not feeling the pain, then there is less incentive to invest in long-term growth. But they are the institutions who have the funds, resources, manpower, and ability to kind of set up new projects to go on large-scale digitization exercises. The smaller institutions are dependent largely on what we call as like third-party offerings. Many of them are looking at sometimes off-the-shelf solutions. Right? Hey, you want to open accounts? There is something in the market. You want to have decisioning? There is something in the market. You want to look at frauds? Here is some offering in the market, right? And so, fortunately, unfortunately, what is happening is because a lot of these smaller financial institutions are relying on third-party solutions, a lot of this digital innovation is happening with these what we refer to as vendors, and these are becoming big behemoths, right? Who are kind of powering all of this digital innovation in the back end. Whereas when you look at some of the larger companies, they're trying to still kind of have this mindset of doing most of the things in-house. So it's almost like the industry is diverging in some ways. Another aspect of this is, right, in many ways, digitization versus rethinking the digital process, they are not like different exercises. It's part of the same kind of continuum of things that everyone is doing. And often the priorities are, like for most smaller institutions are, hey, what do you need short term? I have these needs right now, so these are priorities for me. And I really don't have the bandwidth or the resources to invest in something long term. Right? And larger organizations sometimes tend to have a 3-year strategic roadmap, a 5-year strategic roadmap. Not very likely to happen at a smaller organization. Right? We have to be by design or have to be more flexible. And so that plays a big part in how organizations kind of look at digitization versus completely revamping that process. Large organizations here have a disadvantage, which is that like it's the saying, right? If you have a big ship, it takes time to turn the big ship, right? So if you're used to, for example, a certain core system, right, or something else that they have been doing, then they have been using that across so many branches, across so many offices, right? And they have so many people trained on that. It's very hard and difficult for them to say, oh, we'll kind of trash that and move ahead and adopt something new. because they have something that's working for them, right? And so whereas kind of for neobanks, for example, it's easier to kind of rush and kind of go do a new thing and say, oh, we'll do this digitally. For example, I'll tell you something very simple. When Chime came in, Chime is a digital bank, they started pioneering, hey, 2 day early, which means that if you get your pay through direct deposit, they will make it available to 2 days early. Because it comes as clockwork, there's very little risk, not like most of the ACH transactions where you have fraud risk. They said we'll make it available 2 days early. And look at what it did to everyone else, right? Now everyone else started looking around, hey, what can we do? And so is that digitization? Many of the institutions internally actually kind of looked at digitizing their old processes. Hey, we are sending this file from here to there. What do we do? Let's digitize. And they could get to it to 1 day early, many of them. And then they said, oh, but we still can't compete with this new bank called Chime. So what do? Now we have to kind of do some technological innovation and adopt some new processes and rethink how we do stuff. Right? So it's almost sometimes a market challenge that forces incumbents to take one step after another. Sometimes digitization is enough, sometimes it's not. But both of these kind of different kind of players have their own kind of pluses and minuses as to kind of how quickly they can invest in. One has the funds, but they have, I would say, almost like legacy technology that they can't let go, and they have the resources. And the other one is kind of trying to kind of innovate and find their own niche, but don't have enough resources to kind of do a whole lot, right?
Yeah.
And so they are kind of, so there's a healthy competition between those two segments.
Yeah. No, true. So one follow-up question, right? So, we talked about digitization, rethinking, and there's one common thread. Sometimes you can't connect, different systems, especially say, third-party systems that are involved. So, if you recall RPA or robotic, process automation or, intelligent process automation, there are multiple terms for automation that was going around for probably, 5+ years, where mostly it is replicating what a user would do manually, almost like screens. You enter something in this screen, you click OK, it goes to next screen, then you enter 4 different things, and so on and so forth. So in a way, it is a poor man way of automating technology, because you couldn't do things on the back end, either because it is disparate technology that you can't connect, or the other common complaint that I hear from CIO or CTO is any technology project actually takes 6 months to a year, and then costs so much, but I can't wait for a year. So can we do something? And then the answer immediately is RPA, where you can connect different systems. It emulates the user behavior, and a lot of companies actually has done that as a stopgap solution while they are building the pipes to connect different applications as much as possible. So question, Soumya, to you again is, from your experience, all of the companies, banks and financial services companies who have implemented RPA, robotic process automation, it has definitely brought in benefits in terms of reducing the cycle time, because robots technically process things faster than a human. What I could type versus a robot could type. Also being consistent, because it's not judgment based. If it is rules based, either if you configure the robot correctly, it's going to be right 100% of the time, or if you configure, you screw up, it's going to be wrong 100% of the time. So it's either crap in, crap out faster, or it's going to be good throughout the way. So from your experience, are you seeing the companies who have implemented RPA in the last 3 years, because they have promised ROI after 2 years, right, to incur benefits? Are you seeing those companies reaping benefits from RPA solutions?
Yes, absolutely. Kind of now, being from a technology background, I would say that I have always viewed, my personal bias is that I have always seen RPA as short-term fixes for something that needs a long-term solution, right? And it's I'm not the biggest fan of those RPAs, but they do serve a huge kind of and very effective purpose in many of these institutions. they were needed at the time. And so, do I see them really performing well in the short run? Yes. I view them as band-aids, but they have done a very effective job in many institutions. For example, right? It has enabled institutions to be very responsive. Almost any institutions, for example, you have these manual sets, people doing these manual reviews or other tasks and putting data from one place to another and changing rates or whatever they are doing, right? Reviewing issues. It had been kind of, many of them have full-time jobs, and the people managing these teams have full-time jobs. And then something comes up, and there's an emergency, and something breaks, right? And then you need these same people to go fix them, right? And what RPAs have done is, right, it has allowed people to break that cycle. People have become more responsive. Functions and tasks are less likely to break. When they do break, you likely have some degree of automation that you can bring to the table, that you can tweak and bring to the table, that roll out extremely quick, that is a short, easy fix, and then take care of those issues. You have, for example, I know that we used to have a bot to close inactive accounts in one of the institutions I was supporting, right? They had a huge fraud attack. And the fraud team figured out, oh, these accounts are suspect. What did they do? They leveraged that other account bot that was closing accounts for active customers, gave it this new list of accounts, and said, oh, close these accounts, right? And obviously they had other implications. But yeah, but there was something available for them to leverage. So bots can be flexible, they can be used, and I'm all for it, right? Other things that they do, for example, I remember when we used to do some smaller institutions specifically, they don't have the technological infrastructure to, for example, for marketing fulfillment, right? And they have been for them to go compete with, hey, Shape has this offer or whatever else, some of these larger institutions have these offers, right? And we want to have something similar. They sometimes don't have the resources to build out that whole infrastructure and do it in that fashion, right? So what do they resort to? We'll do some of it manually and some of it through RPAs. Fulfillment is sometimes done through RPAs. Okay, look at these accounts and give them their bonus. So it's been it's in some ways almost leveled the playing field and allowed some of these banks to compete. But it also has a few other impacts. Yes, it does do stuff consistently and effectively and allows banks to compete. The two things it does that I one is it sometimes makes companies and institutions feel that you don't really need that digital transformation. Because we have a band-aid solution, which I am a firm believer RPAs are a band-aid solution. But it works. And because it works, there is sometimes a tendency to not invest in the long-term solutions. That's one. Second thing I do is that I have seen is that, especially in this marketplace where you have seen a lot of technology companies, especially laying off people, right? There is a set of people over there who were leveraged and who were doing these roles, playing these roles very effectively. And their roles are now at risk. And that's probably part of this whole digitization exercise. It's almost inevitable. And it is part of the return on investment that many of these financial institutions talk about.
No, absolutely. I mean, one good thing that I like about bots is, you don't have to deal with attrition challenges or you don't have to give them vacation days. So, pretty much you can scale, infinitely as long as you have, hardware, software to, support that. So that's, another segue to my next question. Smaller banks or credit unions, they don't have, all of the budget to do a lot of technology, and they still have to compete with the neobanks, digital banks, and also the legacy banks. But with the, AI, ChatGPT, and all of the new models that have come up recently, I've read that, it can write poems, It can even pass MBA exams. It can answer pretty much, anything with, fair accuracy. So do you think the smaller institutions now can actually leverage some of those technology? Because bigger banks, they used to do AI ML, models, implement from scratch, because they have to train that. And, it is only as good as the training set of data that it is, fed. So my question to, Marian or Salim, how do you think smaller banks credit union can actually compete with the emerging companies? Can they take advantage of, some of the latest developments in AI ML, which comes out of the box with, few things that they can, readily use, and at least be on the same page as the other bigger institutions? Marian, you want to go first?
Yes, I think it's incumbent on the small banks, even if you don't have the resources and the funds to set up your own AI platform and have dedicated people. They are reaching out to fintechs and out of the box solutions, third party vendors to do that, because our mandate from our regulators is that you have to have a reasonably designed program. So you cannot fall too far behind the technology. There is no mandate that you have technology, but a reasonably designed program will not pass muster if it's so far behind in its capabilities that it no longer is reasonable. So even though the regulators are not very prescriptive, you do have to keep up with industry standards. You cannot be lagging behind and doing everything manually, even though there's no technical requirement to have a system. You're not keeping up with the industry, then your program will not be adjudged to be reasonably designed by today's standards. So I think that's why you see such a proliferation of fintech companies, startups, people offering all kinds of services. I've been talking to a lot of my colleagues who are CCOs, and some of them have actually outsourced completely their KYC process or outsourced completely their transaction monitoring process because they just cannot build a system and maintain one that is suitable without jobbing it to an outside company that is dedicated to doing that. However, we have been reminded time and again, just because you outsource the functions, you are not outsourcing your risk and you are not outsourcing your responsibility to ensure proper controls. And that's where third-party vendor management is now such a exam priority. Sure, you can hire anybody you wish to take care of your compliance related functions, but what is their cybersecurity protocol? How are they protecting customer non-public information? That is still your responsibility. And I know my information security officer is not happy any longer with just getting a SOC 2 report from somebody. They are actually going behind that report and saying, how often are you testing your controls? Where do they reside? Do you have multi-factor authentication? The vendor due diligence process has really ratcheted up because outsourcing involves so much technology. And as long as cybersecurity and customer information privacy are exam priorities, compliance officers are going to be heavily focused on that area.
So do you think AI will play a role inside your own organization to help you with, checking some of these things or fraud transactions? Or do you still think that, it has to be done manually?
Well, at this bank, we're trying to develop some things in-house because in Asia, it's quite a powerhouse. So they do have technology departments that can develop AI. For compliance and anti-money laundering, a lot of the AI these days is trying to filter out the negative news that we run on individuals, on entities. There's just so much now out there. When you do a Google search, you'll return 358 articles about a particular person or a company. And AI needs to be enhanced so that we could sort all of that, all those results, and separate the wheat from the chaff and zero in on what really is important information. So that's just an example of how AI can help AML compliance, and also running queries I know that during the whole Russian invasion of Ukraine, with all of those directives that came out for sanctioned parties, and the U.S. government added a whole slew of entities and people, I wanted to know what's my exposure to that part of the world. And those of you who do correspondent banking know that every bank has a BIC, a bank ID code, and within that BIC, which is a series of numbers and letters, there is a country code. So I asked my IT people to run all the BICs that have RU for Russia in the BIC code to see how much exposure do I have. Are we talking about hundreds of banks that are processing through my shop, or thousands, or very few? And very fortunately for us, it was very few. I think a handful. We just don't, our customer base doesn't play in that part of the world. So that was fortunate for me. But that's just a very small example of how, maybe you don't call that AI, but that's what I consider how technology can help me as a compliance officer.
Oh, okay. Thanks, Mary. And Salim, anything that you want to add on how smaller banks or credit unions can compete with the larger banks? And one thing, before you go, Salim, Marian, you talked about the transfers and the risks, right? So between correspondent banks and all of that. I know we are working with a couple of clients on the international cross-border payments using blockchain technology that actually reduces the time taken between multiple banks and the handoff and the hold time, etc. Pretty much within 24 hours, you can send money anywhere. So I know that technology, is not widely adopted by all of the banks, but that also aims to relieve some of the, choke points, or even take out some of the central authority. Like in your case, you talked about the, Russia war. So we don't want anybody controlling, anything in one place. That was the beauty of blockchain and the decentralization. So maybe we can have Salim, because he is at least in the forefront, has experience managing banks outside of US, where they are trying to implement some of the blockchain based payments, right? Smaller institutions, sometimes larger institutions, they don't want to take the risk. Smaller companies or digital only companies, they are willing to do that because they don't have a legacy system, right? So that is all they want to start with. So Salim, any views from your?
Yeah, let me go back to the first question, which is about the smaller banks and the credit unions. I mean, they inherently don't have deeper pockets, right? I mean, the bigger banks, they have deeper pockets, they can invest in technology, but that doesn't necessarily mean that the smaller banks can't compete or cannot adopt technology. I mean, they have to become kind of a niche player. And what I mean by that, for example, is you don't want to be in the red ocean, but rather probably the blue ocean, right? You want to stand out. You want to be a niche player. So, for example, you could appeal to the youth. The youth, they adopt technology pretty quick, and luckily, they like a channel that is not that expensive to improve. For example, which would be the mobile banking. If you design the best type of mobile banking, you can probably have the best app under $1 million, right? So luckily, the channels, the branches, and the ATMs, it's really very expensive to operate and maintain. But if you focus on a niche player, like the youth, for example, and you kind of speak their tone of voice, you design a UX and UI experience that is intuitive, that is easy, that is approachable, then or introduce gamification, for example, you can definitely be able to stand on the top. So the other thing too is you want to, as a smaller bank, you might want to partner up with fintechs because a lot of the fintechs, through an open API, a lot of the fintechs pretty much, they invest in the technology themselves, so you don't actually have to invest in the technology. And of course, you want to leverage the data and the analytics. I mean, this is definitely a game changer, right? We know for a fact that banks sit on a wealth of information, but the challenge is how to make sense of that information. And if you want to stand out, you want to be able to compete, then you want to make use of that data.
Sure, true, absolutely. So, one follow-up question on that. We talked about, technology and then everything being done, through mobile phone or tablet or online through the web. And we have also seen, at least in the US, the physical footprint of the banks or branches actually coming down. There's a lot of consolidation that we have seen, and as a result of that, again, the physical footprint of banks or credit unions or financial services companies have come down. So from your experience, do you think that that trend will continue? And flip side, if based on the demographics, if you remove a branch or multiple branches in a particular area, and people actually rely on going to a branch to do all of their banking activities. So what is your view on the physical retail footprint of the banks and financial institutions in the future?
I mean, there's no doubt that the physical branches are probably diminishing. I mean, if you look at the US in 2021, they closed about 3,000 branches, right? We've in our bank, we actually closed down about 20% of our branches in just the past couple of years. And basically, the decision that we've made that is we looked at the branch proximity and underperforming branches. So I do expect that a lot of the physical branches will continue to kind of consolidate, so to speak, because they are, again, expensive to kind of maintain. But I think if the physical branches are not going away for sure, I mean, they're not going away in the long term. What I think needs to happen is pretty much a paradigm shift. The banks have to rethink and reconstruct their branch model, right? So let me tell you what we've done. Our bank, 2 or 3 years ago, or probably about 4 years ago, we've seen that the technology is ramping up, and we said, okay, how do we? But we still needed to kind of expand our branch network. So how do we expand? And we decided and came up with this model called Express model. And which is pretty much kind of like a micro branch. It's a third of the cost of a traditional branch. It's only 3 employees as opposed to 7 employees. So it was kind of a stepping stone towards digital transformation. But what needs to happen is you need to change the skill set of branch employees. The branches used to be the sales and service channel, right? They used to, if you want to open an account, you go to the branch. If you want to, have a CD, for example, you go to the branch. But what needs to happen now is that the branches have to be hubs for knowledge. There should be a shift whereby you upskill the employees in the branches and you start working on, for example, wealth management, bank insurance, investment products, maybe mortgage lending, things that are transactions that are complex in nature and that they require face-to-face. And also, the older generation, they still prefer face-to-face to a certain extent. So I think by doing that the branches can maintain their presence. And you also want to lower the cost, and lowering the cost of operating a branch can be done through, probably energy efficient branches, lowering down the number of employees. But I think with the paradigm shift, they're not going to go away anytime soon.
Yeah, no, I completely agree. Though we have, robo advisors for, wealth management, investment management, etc. So still, a lot of people actually, believe, and they want to go to a branch, talk to a human being, and get the perspective, not just put their parameters in the screen and say, okay, invest in these 4 funds, right? And trust that yes, it'll, bring them good. So that leads me to the question on metaverse. So we talked about the physical footprint shrinking, and with metaverse gaining traction, and some of the banks, including JP Morgan, they had put out something in metaverse, and other banks like HSBC are also trying to experiment something in metaverse. So Samia, from your standpoint, do you think that will be the future where a lot of banks and financial services companies will try to embrace metaverse for virtual banking, just to give that feel? It's not anything different that you can't do already, but it's just a feel when all other industries like retail, they are embracing metaverse. So if people are there in the metaverse shopping for something, and then you see financial services company, they can quickly go there, check on what they have, or if they have a advisor, they can talk to them. So that was the reason why I think banks wanted to be in that space. So that's my view. What are your views on it? I think you're on mute.
Yeah. Okay, thanks for that. Yeah, I'm a big votary for all these technological progress being incorporated into kind of financial services and working things out. I remember a long time ago, there was this movie on Surrogates where Bruce Willis was doing this, and then there was kind of plugged into this, what was that kind of their perception of what a metaverse. Recently in popular culture, right? If you have seen Free Guy or Ready Player One, you have seen people kind of, especially youngsters, being hooked to kind of to being inside a virtual environment where they are kind of essentially living their lives and doing their everyday tasks. So yeah, I do believe that this is something that's for the future. With metaverse though, and while I have seen people have video conferences in corporate world, maybe some of us have already kind of experienced those, having our own kind of conferences in a metaverse. But I sometimes suspect that is it too early at this point of time? Is it like something like Google has its Google Glass and they tried really hard to make it work and it didn't? And it will probably work out at some point of time. Was it before its time? Similarly, I believe if you look at iPads and tablet technology, it was there before. And there were some solutions in the market that could have been used as tablets, but it took a while for it to become mainstream. So kind of following up on kind of what Salim was saying, right? Could we offer some of the services which need face-to-face interactions, complex issues, dealing, and have people kind of come face-to-face on the metaverse? Yes, we can. But we potentially have a challenge, which is that many of the people with funds and working on these complex solutions, sometimes financial need of complex financial solutions, they tend to be a bit more mature, tend to be not your Gen Z or the youngest of people. And so sometimes used to a certain way of doing business, which may or may not lead to them adopting the metaverse readily, be the first adopters of that, right? So while I do believe that this is coming, it's on its way, I am not fully sure what the timeline for that is. Is it around the corner? I am not sure if it's around the corner. It may take a while for people to get really warmed up to metaverse.
Okay. So, since we are talking about metaverse, I want to touch on the other hot topic as well, on crypto. So that has made, waves in the past couple of months, actually. And the value of crypto also, has come down significantly in the last 12 months. But still, some of the, investment management companies, they have allowed crypto as a potential investment vehicle in, 401k or retirement funds, etc. So with all of the issues that we have seen, with so many bankruptcies of major exchanges and major companies having their own coins, what do you think is the future of crypto, both in terms of government issuing, say, their central coins, or on the private side?
Right. So if you look at the last time crypto went down, I was one of those people who invested a little bit in crypto, not enough to make me kind of be able to retire, but just a little bit enough to feel the burn. Last time the crypto prices went down, I remember, if I remember correctly, Bitcoin went down to about $4,000 or $5,000 in 2017 or 18. And this time around, if you look even at this kind of peak downturn where everything is selling off, you have a FTX and other concerns, right? It's still somewhere close to that 17, 18 or $20,000 mark. So despite all these challenges, you will see a significant increase in the value of Bitcoin. And so to me, what that tells me is that this technology, despite its challenges, is probably has its uses and might get adopted. What are the key challenges? One, right now, crypto is primarily used for trading. Let's face it, we want it to be, it's not really a coin that you are using for transactions. You can't go buy pizza or watch a movie and pay with crypto. Transaction costs are too high. So that whole adoption of crypto as a currency and as a vehicle for transactions is again being worked on by some very smart people and some very smart companies. And a lot of these large financial institutions are actually investing in that infrastructure. Slowly but surely, there are a lot of startups coming up. They are to some extent being funded by these larger financial institutions, directly or indirectly. And there's a lot of innovation on the way. What can it enable in the short run? I think there is a lot of smart contracts kind of solutions that something like Ethereum can kind of enable. But for right now, if I kind of look at things, people are already lending money in crypto and Bitcoin. You already have debit cards, crypto debit cards. So things, from my point of view, this industry is kind of looking ahead despite challenges to get more integrated into our financial services. You have ETFs, like you said, you have 401ks. This is not going away from my point of view. This is only, but will this stay in the form that it is? Probably not. You'll likely have a whole lot of regulations. I know someone who works on an NFT startup, and he's really young, straight out of college, and they don't understand why you need regulations in financial services. I was like, okay, let me try to explain, right? And so there is a certain degree of disconnect between people who are working on crypto and people who are used to working in financial services and people who are regulated. And these things need to come together. Crypto poses certain risks, but not the same risks as cash or some other forms of transactions, right? And there is a degree of, I would say, lack of understanding of various perspectives. And I think this industry will mature, and people on one side will see the need for the regulations, and other side will see the value of this. And hopefully, going forward, we won't have some of the kind of, and some very famous people have said that crypto has no value and it will go down the drain. That includes people who are kind of very, very smart, at Charlie Munger and Warren Buffett, right? But there are other people who are almost equally as smart who see a value in it. So while the jury is still out, if I look at the market value and adoption of crypto, that has been slowly, despite all the challenges, been on the uptick. So I'm very hopeful that this will get kind of more and more integrated into our financial services offerings overall.
Oh, yeah, I mean, the jury is, still out. I know a lot of industry stalwarts, they're not positive about this. They're, very vocal against it, actually. But yeah, I think in the due course of time, probably we'll know. But I'm sure Marian, the chief compliance, chief risk officers will have their, hands full to see, what they want to do with this. So I think we are probably about time right now. Nitin, Arvind, let me know if we have time for, one or two more questions to the panel. Then, we can take questions from Q&A.
Yeah, sure. We can do that.
Okay. So I know we talked about metaverse, crypto, RPA, but the backbone of crypto, blockchain, like you mentioned, has actually a lot of good use cases, right? So you mentioned smart contracts. You can use that in multiple ways. So Paramita, question to you: do you think blockchain as a technology or a framework, does it at least have a lot of uses in the BFS industry? What's your view on that?
Absolutely. And look, I consider our generation to be the lucky one to be at the tipping point of this radical change and witness this technology changes the economic structure in ways that were previously beyond our capacity to imagine. And finance, as we know today, is centralized. And it's because of the flaws in that system, it led humanity. So initially from barter to adopting gold coins as an early form of currency, and then fast forward to the current times, the centralized finance as we know of it today has a number of limitations, right? So Web3 aims to get rid of these good old traditions of the centralized finance and change the industry's paradigm. The main objective is to fundamentally change the whole architecture of the financial infrastructure. And DeFi, or the decentralized finance, is this innovative financial system. And in my view, I think there are the DeFi that brings in this primary financial innovation. There are uses and advantages that will be there for the end user. So if I may touch on a few examples. For example, there's ease of access. And the traditional KYC AML that we know, or the credit score evaluation, the risk profile will change, right? Now the user needs to know, what the user needs to know are the basic knowledge of the protocols that needs to be used and how to engage with the infrastructure. There are incentives. So DeFi and the overall cryptosphere have a great method for rewarding users that are taking an active part in the growth of the network or protocol. And these users receive incentives for getting involved in the governance of the networks, validating transactions, protocol improvement, and marketing advocacy. And as much as the common users think, or the common people think that crypto is very risky, crypto can be actually, you can literally trace the network, and this really helps in the KYC AML part. You can absolutely trace it back to levels to know the nodes of the network. The financial sector has been completely transformed by this Web3 technology. It has allowed us to approach financing from a different perspective and provide a flexible and open-ended solution that serves a larger number of clients, right? While it's difficult to say that DeFi will completely replace traditional banking at the moment, one thing is certain, that progress will be made towards a greater economy and a more equitable distribution of wealth.
Yeah. No, I mean, definitely, I agree with you. There are a lot of use cases. Even, we as a company, Infoocean, we are working with a lot of digital banks to implement blockchain-based solution in terms of domestic payments and cross-border payments that reduces the time taken. We'll still have the AML, KYC controls, but faster payment solutions. Other use case that we've been working with companies is the mortgage title, because nobody should change the title, the ownership of an asset. Right now it is done traditionally in the books in the county offices, saying, okay, who owned the property or an asset, then he sold it to so-and-so, then he sold it to so-and-so. That actually is a excellent use case for blockchain, because it's immutable. You can't change. You can only add new owners. So there are a lot of such, and reconciliation, a lot of such use cases that we are working with the clients. Now, I know throughout this panel, we talked about different technologies. How do you start with transformation? What due diligence you will do? How do you implement? How do you sustain? How do you measure the ROI? What are the different technologies, including like digitization? We talked about OCR. We talked about RPA, that cuts across, different systems. We talked about metaverse, crypto, blockchain, but, and compliance as well, right? Embracing all of these things and, keeping everything in check. The final, thing is, how do you put all of these things in the ecosystem safe? We have seen cyber attacks, both government websites, private websites. That's my last question, to see, while you do all of these things, how do you keep your institution safe from, malicious users trying to attack your network? I know there are a lot of solutions. We are advising clients on zero trust solutions. So the question is open. Maybe Marian, you can, from your experience, see what controls are important to secure this whole thing from a cybersecurity standpoint.
Yeah, I think the key is twofold. First of all, if you want to enhance your technology, you can't shut down your surveillance while you're upgrading and introducing a new platform. You've got to run the bank at the same time that you're trying to change the bank. So that is always an inherent challenge, because surveillance monitoring has to continue to go on even as you want to swap out an older system for a new one. And now I think more than ever, compliance people and IT people have to collaborate. When I started in this industry eons ago, there was no such thing as compliance IT. IT people would say, we're not compliance people. We don't know anything about that. And compliance people would say, well, we don't understand IT. And the two would never meet. But these days, I help to write the business requirements document for whatever new technology it is that we would like to have in order to support compliance functions. Whereas years ago, I didn't even know what a BRD was. So now the collaboration between the two departments is very, very important, because the IT people bring so much knowledge about what's feasible, what technology can do for us. But compliance people have the subject matter expertise to know what it is that I need to know out of all of that big data that comes through our banks every day, of the millions of transactions that we process every day. What is it that I need to see? What kinds of patterns do I want to detect? Where should the controls be so that I don't, so I could prevent and mitigate whatever risks are coming in through the millions of transactions that are being processed in my shop. So the collaboration is all important. I can't really speak to the details of it because, again, I come from a law and compliance background, but I know that today I work almost daily with my IT support. And they are now an integral part of my world. Whereas 20 years ago, I don't think I ever had any interaction with our IT people, and vice versa. So, so from compliance's point of view, I think I just want to stress that the two groups have to really work together hand in hand, so that we can help each other get to where our institutions have to be.
Yeah, no, you said it right. You have to run the bank at the same time change the bank. That reminds me of, like performing a bypass surgery on a person, where you have to keep the heart running at the same time, try and fix it or change it, right? So
Right.
that's actually very important and delicate balance that you need to strike. I think we have probably only a couple of minutes left, and I went through the questions in the Q&A. I believe we covered the cybersecurity, we covered the AI ML, we covered the physical branches. I think the last question was directed to Salim, because you have exposure to markets outside of the US. The question is, when do you expect technology to have completely occupied Middle East, especially in the Jordan? Do we need 10 years, for example?
Wow, that's a good question. I don't think you want to put a timestamp on that, right? I mean, and this is something about the digital transformation. Digital transformation is a journey. It is not a project. It is not something that is going to end, next year. So this is something that is always evolving, and there are phases of digital transformation. So, for example, in our bank, we're still at the early stages. So you want to continue that journey, and the thing is, you want to create awareness with the digital transformation as well too. One of the things that we've done at the bank is that we actually held awareness sessions, because not everybody knows what a digital transformation is. A lot of people have this misconception that digital transformation is technological transformation, which is it's not. It's technology is part of it, but the other part of it would be the processes, and we've talked about this. The RPA is nice, for example. It's a nice technology, but at the end of the day, if you have a 10-step process and you do automate that 10-step process, still a 10-step process. What you want to do is you want to cut it down to 2 or 3. So it's a process change as well too. And the other one is you want to involve the people. So, and this is something that it doesn't come easy, and it would take time. So you want to hire the right people, the tech savvy people, the young people that understand the technology, that use it on a daily basis. You want to create awareness, like we've talked about. Don't put a timestamp on it. As you got to breathe in and day out. You got to think about digital transformation.
Oh, absolutely. Well said. It's not technology transformation, it's a business transformation always. And technology is a tool to aid that. Now, I think, great session, great inputs from, each one of you in your own line of expertise that, you live and breathe in every day. Appreciate your time, and thanks for all your responses, feedback. I hope the audience and, including me, we learned knew something every day. So this is very helpful, and thanks for your time. So Nitin, back to you.
Thank you. Thank you, Natarajan. Thank you all the panel members. It was amazing discussion which we had for the banking industry, how technology is changing or how things are impacting the banking industry. Thanks a lot for bringing all of you experts, their expertise into this. So just to wrap up, we would like to thank our community partners, speakers, and attendees who came together for enriching knowledge through this forum. We had a great set of panel speakers, as I rightly said, who came together to share thoughts. Just for your information, today's event was broadcasted in the YouTube page of our company. So all of you can go and see the recording anytime. Please log on to our website and like the social media channels. We'll be sharing lots of knowledge sharing topics, announcement of next events, details, and much more, which will help you register and attend the same. Also, we would like to thank InfoVision, who is our knowledge and innovation partner, and Digit7, who is our technology partner. To understand more in depth, connect with them. All of you can go through their website, which is infovision.com, and closely liaison with them. Further, there are lots more in store for this year, as this year has just started. This is the first event in terms of banking. We have a lot of focus on other sectors like financial, insurance, telecom, retail, healthcare, supply chain, manufacturing, energy, utility, and so on. So request all of you to keep connected with us and enjoy the learning. Thanks, and do take good care of yourself. Have a lovely day and great week ahead, guys. Bye. Take care.
Thank you.
Thanks, everyone. Have a
you.
great day.
Thank you, everyone.
Thank you, Raj.
Appreciate
Thanks,
your time.
everybody.
Thank you.